Okay, let's do that. Hi, morning to you, hosting. Good to hear from you once again. Okay, let's go, right, guys? Let's go. Put up. Okay, all right. 15th of July, 2021, Thursday. The cost of being a bear in a COVID bull market. All right. Now, I think early this week, right, there was this little conversation whereby I think one of our TWB member, Anna, was just saying, COVID, yeah, it was bad at one stage, right? From last year, February, the market collapsed down 22 trading days, down nearly 40%. But after the 22 trading days, the market rebounded all the way. And not only crossed above the starting point of the pandemic, all right, it even go higher, right? And as a matter of fact, the S&P from the lowest point of the pandemic to Crude today now is up by 100%. So which means that, right, in during the pandemic time in March, if you just go and buy the S&P 500, you have basically itself, right, made 100% return in just less than 2 years' time. So what I'm trying to explain over here is that, right, the bear will always take only like 30% of the entire region. All right. In fact, itself, right, about 20% or even 15%. So which means that, right, if you have a scale of 0 to 100, okay, do remember that 5% of the time is consolidation, right? About 15% of the time is a bear market. And 80% of the time is actually a bull market. Because think about this, since 1896 until to date, the market from 56 points for the Dow Jones is now at 35,000. All right. So that is how it is being, how this thing will work. And of course, people, when we do investment, we buy stocks. We buy and keep stocks. We don't short stocks every other day. So definitely for sure, all right, majority of the people are definitely more on the buy camp. Now, what's the cost of being a bear in a COVID bull market, right? Is whereby you expect that COVID is going to bring out the bull, which should be happening. But because Federal Reserve is pumping so much money into the system, it doesn't really happen. And hence, therefore, there's a cost involved to being a bear. And I'll talk to you more about this cost, not in terms of monetary losses, but in terms of option costs. All right, what's the price for paying for this? So this will be the last slide of today's MAO. Yeah, the last slide. So if you want to hear what I need to share about this particular part, you have to wait until the last slide of today's MAO. Okay? All right. Now, before we start this morning, once again, disclaimer as usual, I need you guys to know that anything that I represent here is my own personal opinion and my own suspicions in the market and my own interpretation. All right. End of the day, you have to make your final decision before engaging into the market. Okay. This one will be very clear. Okay. Right. So you identified me. Let's look at the market in general right now because Hong Kong is just open. Okay. So let's look at China first. Okay. China. Now, China is trading lower right now. Okay. All right. Yesterday was a downer. Okay. And I told you guys, I'm still looking at China market to come down to this particular point. I already said that the China A50 will go down to this point here itself, 16,436. And I was very, very adamant on this. I keep on saying that it will come down ever since from this point here. From this point, the death cross, I've been calling for sell. First target was here. Second target was here, and third target is here, right? So now it seems that whatever I've been saying is actually manifesting. So the question is this: how come the Chinese market is coming down so much, yet the US market is not going down? Okay, we'll talk about this later on when we go to why Cathy Woods is getting a bit worried and she's liquefying some of her position. Okay, we'll talk about that later. Then we talk about Hong Kong right now. Let's look at Hong Kong. Now, Hong Kong gapped down this morning. Yesterday closed right here. Now, this morning it gapped down and now is trading above opening price. All right, trading above the opening price. So as long as Hong Kong stable opening price is still okay. This is the MLP that we need to take note of. It's a doji yesterday, so likely today will be a directional day. Can the market climb up all the way to close positive? It's all possible. I think it's possible. But at the moment now, right, you can see that the MA30 and the MA200 is not in the favor for the Hang Seng on the bull side. So traders, just take note of that. Okay? All right, so coming to Hong Kong later for this, we look at the chart-wise. Let's go. Okay, for Hong Kong day chart right now today, now Hong Kong day chart is now showing lots of strength because you must understand that Hong Kong, the KSI is green in color, So when this thing opens here, all right, and it triggered pivot 2, based on our rule, CCRY will be a buy, all right, CCRY will be a buy. So now you can see that Hong Kong gap down, but perfectly open. Look, notice that the opening price and the pivot is almost identical, right? In fact, identical. Look at it, 27,652, pivot to 27,652. And if you remember how to use pivot, right? You know that, my God, look at it. So our pivot again, very, very perfectly predicted the opening price of the day. Scary, right? Don't you find it very scary in this? All right, our pivot. So now for today, right, if the market stays above OP, the market will go up. Okay, simple as that. Okay, if the market stays above OP, today the market will be up. Now, if the market later on do break below OP, there will be some selling, and the selling should bring it down to KTR -1 easily because the KSI is green. Are we clear with that? That means, I repeat myself, right, for the market to go to KTR +1, it should be a walk in the park because everything is good. Now, if the market do come down, then KTR -1 should be the first target, and then after that, you must be very careful because the KSI is green in color. So look at the M5 now. You can see that very fast from the opening price, straight away, it have triggered KTR +1 already. You see that? Amazing, right? Look at the speed of this, and it's happening right now. So that's why, you really have if the you know the KSI very well, you know how to activate it, you will know exactly what to do every day. To make basically money every day from the market, it is very possible as long as you follow some of the rules that I've been mentioning. Okay, all right. So pretty cool stuff. So let's see later on what will happen to the market. All right, we'll come back to this later. But Hong Kong is definitely now gushing back up again, trying to find strength to go higher. Okay. All right. Let's continue our MAO. Okay, let's go. All right. So now when I see this itself, right, straight away, I remember a movie that I watched many, many years ago. Anyone can tell me what is that movie where you see this plant here? That movie actually left a very deep impression. When you are a young boy and girl, right? That movie basically showed the plant eating up humans. Remember that movie? All right. Right, I cannot remember the title, so I didn't have time to actually go and find that show. But I'm sure that I put down some keywords, right? I should be able to get that movie. Anyone here remember this movie during my time itself, your time? Okay, when I'm I think I'm 10 plus, this particular movie about the plant come out and bum and munch on human being. All right, so this particular cartoon shows that feed me, Jay, is inflation. All right, it's telling you that Jerome Powell, feed me with more inflation. I can try and show you that. I need more food, Jay. All right, so we can see that last night, okay, Jerome Powell came out and talked about how he viewed the market, and it's almost identical. Every time he says certain things, whatever he scripted the last 5 times is always the same. In short, all is good. This is part of inflation. You must see inflation for this economy to recover, and hence therefore there's no need to panic. Everything is transitory and blah 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 blah. So it's always the same and nothing changed. So when the market heard this again, initially they were happy. But after a while later, right, they ask this question. So when would that be? When will the tapering be? And of course, when he said that, well, we need more time to look at the market to see the data, which is very honest of him, the market just, okay, that's it, enough. Then they start to sell. All right. The thing is this, the point is this, when he was talking about all this is at the same time, right, the bond yields came back down. Now, the surprising part is that the data is actually showing inflationary data, right? So we saw what happened in CPI, but apparently yesterday, right, when the data came out, it's again above the market. The yield went up first. Then in the second half, when Jerome Powell was speaking, right, the yield just come back down. It's as if that Jerome Powell has a power to say, well, there's no need to worry. And of course, when you say that itself, the market just know how to come down, okay, in terms of the yields and the dollar. So quite amazing, huh? So what Jerome Powell says is that the Federal Reserve is ready to intervene if, okay, US inflation spirals out of control. But to him now, these are notable, but believe that they will moderate later this year. So in short, he's pretty confident that by the end of this year, there will be the inflation numbers will come down by itself. Okay, so you must take note of what he says, because if you buy his words, that means that, right, there shouldn't be any worry on any midterm tapering. Now, basically, most people are looking at tapering only in next year, January to March next year. Most people. Some economists are looking at December. Now, traders are looking at August and September. Okay? All right, so you must understand the difference in terms of, if there's a bell curve, then definitely, right, the highest point is still next year. But you're talking about, well, the turning point or where the bell curves are to move, then majority of some of these people, the traders, are looking at August and September. Okay, so you must understand where Jerome Powell is standing when he explained this. So Jerome Powell says that the central bank is more than ready to prepare to intervene if inflation spiral out of control. But again, he said already, this is very normal. It's elevated in the coming months. It will be elevated. That means that do expect the CPI, the PPI to go higher. Yes, in fact, it will go higher. He already tell you that. So, but then again, even it go higher, it's already expected. So if I expect to have it go higher, there's nothing to be worried about. So that is what I'm trying to tell you. So the traders are like, oh, okay. So you know they're going to be higher and you don't mind. Okay, that is where the traders like a bit, okay, let's sell. Okay, so that was what happened yesterday. All right, so that is, I'll do more sharing later on in the main section, but at least you know now, right, it's still this thing here ongoing. So even though we have COVID right now, as long as the market thinks that it's important to stimulate the economy and make sure things are going and they don't care and don't bother, then the bull market will stay bullish. Okay, then of course for the bears, it'll be painful and it'll be tough and it'll be very costly. Yeah, costly why? Not in terms of losses, but in terms of the money you need to put in for the same amount of options you buy for call versus put. Okay, I'll talk about that later. Okay, all right, so to be a successful TWB trader, we always want you guys to be enriched and empowered by some other people. And of course, today we have Larry Connors. I get real concern when I see trading strategies with too many rules. You should too. Now, let me ask all of you guys, do you think that the TWB system, the rules are too many? What do you think? If you think that there's too many, please key too many. If you see that, nope, the rules are relatively fine, all right, in terms of numbers, I mean, in terms of the quantity, just say no. All right, let me hear you guys out. All right, just like the above, this is a great trading quote for keeping trading strategies simple. The fewer the rules there are, the better. Okay, so what do you think, guys? What do you think? Do you think that our trading strategies is too many, too much, too complicated? Or you think that our strategy is just fine, the numbers are good, just enough? Or who thinks that it's actually too little? Come on, let me know your answer. Okay, so Allison say no, just fine, I believe. All right, Michael say that, yep, just fine. Okay, anyone else? Anthony say no. Okay, it seems to be good. Philip say no. Okay, all right. Okay, thank you guys for contributing. Okay, 56 of you for respond. Okay, now the thing is this. Now someone asked me this question. Okay, Cal, how come your system, right? Okay, you know, why can't we make it even better? Like you put a buy call and a sell call there, and then we straight away will know what to do with it. Then we can trade and stuff like that. Now, I would like to explain here is that our system basically reads the market for you and inform you what the boys are doing. And then you will make a decision, because boys can be wrong, right? We have seen boys being wrong. So it doesn't mean that even the boys are buying, the market can still go down, right? So we don't want to put ourselves in a position whereby the system call for buy, you just, without thinking, just buy. The whole idea is to basically go through the whole chart and see the pros and cons of buying or selling, do your risk management yourself. Now, it's really doing that. It's just like I share with you the mantra of how to do fishing. But end of the day, right, going in a different environment on the day, the weather, the temperature of the water, and of course, especially if there's any other factor there, all these will play a part to whether how much you will get for today. So this is whereby it's rather than give you the fish, we want you to coach you guys know how to fish for yourself, and you need to know all the external surrounding to make a good trip. So that's the whole reason why our rules, we try to make it as simple as it is, but you realize that it's always repeated and repeated and repeated to you guys. Indeed. Yes, indeed. Terrain is very important. That's why I spend so much time in the morning doing this terrain for you. Okay, right. Now, today, when I was doing my MAO preparation, right, I realized that today my reasons to stay bullish is so many of them. All right. And the thing is this, I don't know whether you all realize this, is that during my MAO the last 4 or 5 months, I've been using the word bullish more than bearish many times. And I've been saying and advocating that, right? Yes, fundamental, the market is very high in terms of valuation. It's like you're paying $3 for $1 product, but the market is still bullish. Now, there's a difference between bullish and the market is up. Now, up in prices. Bullish is sentiment. So if the sentiment is bullish, right, even the market comes down, the market will just buy up again. And that is what exactly happening. Okay. But of course, recently there's something that changed a little bit. I'll explain more in details later on in the second half of the MAO. But today, there's a lot of reason to be bullish. Let's take a look. Now, first of all, the bank's earnings are good. I told you guys the bank earning will be a good one. For sure, it will be good because there are many IPOs the last quarter. And of course, IPO means underwriting. Underwriting means you're literally taking papers, A4 papers, okay? That is blank, right? One rim itself is like 400 pages. Okay, you take out half, you say create one prospectus, and then you print and you roll, and that prospectus become money instantly. The beauty of IPO prospectus is you're literally taking papers to turn into money. Because you're selling a concept, you're selling a dream, you're selling a so-called investment. And because of that itself, right, people take hard-earned money and give it to you. So that is how things work. And of course, as an underwriter, I will charge both sides. I will charge the company that get itself listed, and of course the people who comes in, right, when they trade and stuff like that, I still make money. So of course, if the share price go higher, I make even more money. You understand? So there's a good reason why the bank shares are doing well, especially last 3 months. But yesterday we do see that Bank of America and Wells Fargo, Citibank came out with their data, but this was doing okay. But the other two counters, Bank of America and Citibank, right, they traded on to the negative side. So let's take a look here. See, Wells Fargo up by 1.8%. This is Morgan Stanley, and we have Goldman Sachs. We have this one is a bit gray or black, JP Morgan. Now the one that didn't do well was Bank of America. Okay, so we come to that later on. But basically, that was what happened. All right, so Bank of America earnings mix for Citibank and Wells Fargo beats estimate. So you can see that. All right, so that's why you have to see that the banks are still okay. Now, yesterday, you can see that the 10-year yields dropped from 1.42, go back to 1.36. I can tell you this is really expected because we all know that Jerome Powell is speaking and means seriously to push the market a bit not very make sense, right? So what they do is that as long as they bring the yields back down, that will push the bonds price up. And of course, when people see this, they say, oh, okay, inflation no longer a worry again. Because even got inflation, Jerome Powell says by end of the year, things will be back to normal. So once again, when market sees this, and of course with money motivating the bond prices, then yield came off. So you can see that the CPI data was bad. The yield went up. Then after they push it back down again, almost instantly. Then after that, right, the markets had to go into this because the auction came out was terrible. The people buying the option, people buying more was so little. That's why you can see the yields, going up. And then after that, we see this happening again. Okay. So the dollar, okay, the yield came down, right? So obviously the dollar also came off, right? So the dollar, because of that, came off, okay? So the dollar supposed to be to show you economic strength also came up by itself. So the question mark is then what are they buying? What are people actually involved in? That is the biggest question mark that everybody have right now, okay? But of course, when that happened, right, the thing is this, the dollar came down. The dollar came down means dollar weakened, right? So dollar came down, dollar weakened, then obviously we should see crude oil price going higher, right? Because crude oil is a commodity. But what you see is that the crude oil price came down yesterday. So yesterday, crude oil was down hard, okay? Right, hard because of the baseline production is expected to increase. So that is what happened, right? And that is what crude oil did. So you can see the market is really not, 1 + 1 = 2. It actually has a lot of factor to really go into that. Okay, so that is very important, traders. All right, this is very important. You need to know and understand this better, okay? All right, just give me a moment. Okay, messages coming in again so early in the morning, so many. All right, now some people did ask me, why don't you just tell them to just hold on after MAO? Because it's trading, Hang Seng is moving. I need to be fair to people, right? So I need to do whatever I need to do, okay? All right, so I just try to make it fast. Okay, so yesterday we saw the lumber price. Oh my God, look at it. Look at the lumber price. The lumber price just keep on coming down. Wow. It was at 1,550 at one stage, and then now it's down all the way to 600. So imagine that at this junction, if you buy lumber at 1,550, and now it's at 600, right? Eventually, just divide it by 2. I mean, from 1,550 divided by 2 is about almost 800, but now it's at 600. So that means that who bought lumber on the way down is in serious trouble. Okay, that is my point here. So of course, with the lumber price coming down, right, does it mean that inflation is just really transitory? Well, I will put it this way. What brought the market up itself, right, will be the reason that brought the market down. And of course, we know that when the price was going up, because there was a sudden rush to get things moving, people getting their house outside the outskirts of the city. Then after that, when all the houses are all built ready, then of course the demand will decline. That is something that we must understand. So the demand supply rule is like that. But the only thing is this, okay, now the price came down, right? Well, does it mean that inflation will go down later on? It is possible, but if you look at it, you look at this next chart, right, then you may think another way. Let's take a look. Now look at it. This is the lumber price versus the crude oil price. Now look at the crude oil price versus the lumber price. So if you look at it again, all right, the cost of inflation, right, comes from all commodities, and definitely now you can see the crude oil price is moving up even higher compared to lumber. So the question will be very clear: is it because it means that will inflation drop? Well, if inflation were to drop, right, the crude oil price should also come down, right? So it seems not to be. So if you put them together, then you can see the difference there already. Yeah, that's the reason why we also want to tell you that in terms of trading, you need to see the market in totality before you can actually give your verdict of the market. Okay, all right, so that is what happened on the market now. Okay, so just take note of this and this. Okay, all right, now I just saw the Hong Kong market trading higher. Let's bring up again. Wow, look at it. The Hong Kong market is shot right up, bang, okay, or all the way up itself, okay? So is the China market higher now? Yes, indeed, the Chinese market is higher now. It's trading now at the high of the day. Okay, so that is the one reason why. And of course, again, I told you guys, if the chart, the opening price today is so beautiful, the opening price of today, Hang Seng is exactly the same price as pivot 2, and because the KSI is green in color, so above OP, above pivot, above OP, all right, it has triggered the pivot. So straight away, the market hit the pivot, recover, and wow, look at it. Gigantic bump up, okay? So KTR plus 2 is also have been triggered. So there is a fair chance to see that we can see KTR plus 3 later, okay? So that's why I say, guys, you must believe in the KSI. Really, imagine if you were to short the market earlier because it gapped down, you're in serious trouble. That's why Hang Seng is, the difficulty of Hang Seng is that if you don't know the market well, you cannot feel it, right? Most of the time you get hit by them. But you can see all this terrain helping you, right? You will know exactly what you may see later. So that is the reason why I like about this. Right, Colin had just updated us at 10 o'clock. We will have the China GDP number. So likely we will see some bigger movement at 10 a.m. Thank you, Colin, once again, our lovely CNBC. All right, CNBC for us is Colin News Broadcasting Channel. Okay, right, that's Colin for you. All right, now, of course, because of the yield coming off, right, immediately you can see that the Fed funds chart reduced down, back down below. That means that now again, they are speculating that maybe we have no rate hike again, okay? So that is how it works. So you understand, right? When the yields goes up, it's right, this Fed fund rate will also follow through because this is actually in terms of retrospect, right? But the thing is that if the yields come down, then of course the other thing will happen. So that's why now they have marginally pushed it back down, and now, okay, no longer involved, no rate hike, okay? So don't worry, don't panic. So that's how the boys manipulate the market to make us confused. Okay, so pretty cool stuff right here. All right, then of course, but the thing is this, but yesterday the dollar goes down, right? That means that the gold will go up, right? Yesterday gold went up. How come that day the dollar also came down, right? But the gold also will also go down. So that's why I say it's never 1 + 1 = 2 in the financial market. But nonetheless itself, right? Yesterday gold stabilized itself at 1,800. And then after that, gold went up to 1,826. High was 1,830 for the cash market. Okay, for the cash market. So the question is this, will gold go higher? Well, I'll cover this later, and my opinion is yes. I believe that gold will go higher later. Yeah, you heard me, okay? All right, so take a look. Now, this is what I shared yesterday, right? Now, yesterday, gold was trading at 1809. Yesterday, the gold was trading at 1809, remember? Yeah? Okay, gold was trading at 1809 yesterday. That was where we were during the MAO. Then I said that if gold can stay above 1810, gold will see 1834. Remember that? Remember that I said that, and I gave you a reason. It was because that the gold has many multiple resistance. And I told you, right, resistance you see from both ways. One way is really resisted, so it may come down to 1799. But on the flip side, if the market can break past 1810 convincingly, then of course the gold price can go to 1834. All right. So those who made money from gold, please key the word made from gold. All right. Right. Can you key right now? Those who made money from gold, can you key the word made from gold so that at least I can see that how many of you had made money from gold? All right. Gold is really now higher at 1828. Congratulations to those people who believe in what I share and been buying gold. Good for you guys. All right. Let me see how many of you made money from gold. Okay. Yay. Okay. Anthony made money from gold. How about the rest? Mandy made money from gold. Excellent. How about the rest? Is that all? Now, sometimes I just wonder, right, if you guys are on MAO and you guys are not using the MAO content to make money, then that is a bit wasted, right? Don't you realize that? Well, this is how I see it. Okay, if you are not, maybe you are not comfortable to share, maybe you made a lot of money from gold. Okay, never mind, it's fine. Okay, Allison made money from gold. Winnie made money from gold. Excellent. Winnie, I see you join us at the right time. All these are at the right time for you. All right, so what happened? I told you guys from the TWB chart, right? I told you the KSI is green, and I hinted to you that the KSI looks very interesting, right? I don't know whether you saw my hint or heard my hint. And then after that, I pointed to you, gold will go to 1823 first, because 1823 is a pivot one level, right? I mentioned that gold will go to 1823, and gold really went up to 1823. And you can see that amazingly, what happened to gold? It goes up. And I give you the key information in the intraday. I say that don't think, just follow. As long as you make from gold, that is most important. And truth be told, right, gold came down to the pivot 2 at 1804.99, stabilized. KCX came in, and KSI turned green color. And I say, don't think, just follow, right? And DTJF, and what happened to the price of gold? All the way up, right? So that is the reason why this is how we make money from market. And I do it live for you to show it to you. And this is not the first time, second time, third time I'm showing this, rather many, many times to all of you. So that's the reason why Arcade make money, good. Wholesale make money, that's excellent. Well done. Okay, so will that be going higher? I'll talk about this when we go to the gold chart, okay? Now, with that, today we will have food for our data. All right, we have saw all of them already. Wednesday data, done deal. So today we will see Intel, we'll see Snap, Twitter, all these will be coming up with data. Now, of course, some of them you realize that like yesterday, Citibank and stuff, we don't have the numbers, right? Sorry, what am I talking about? sorry. I jumped the date, sorry. Yeah, yesterday is we have Bank of America, Wells Fargo, Citibank come out with data. Today is TSMC, United Health Group, I think, cannot see very clearly. Then we also have Morgan Stanley coming up. So Morgan Stanley report will be quite interesting because Morgan Stanley a really long time ago is more towards like they got out from the market. So we'll see whether Morgan Stanley, what do they have to offer. All right, then after that we have the rest, okay? All right, so that is what we are going to see later on today. Let's see how the market will perform. Okay. All right, so, okay, this one skip, I won't do that. All right, so don't forget every day Susan will go live with all of you, and Susan is a very active person. She offers almost like 7 to 10 charts every day, every moment. So that's why some of you guys are making good money from Susan sharing. Okay, please continue to support her. Okay, every day, Monday to Friday, 3 p.m. to 5 p.m. And in the evening is Monday, Wednesday, Friday. So today's Thursday, she take a break. Okay, don't expect her to be around. Okay. All right, oops. Okay, I think on PowerPoint issue again. On. Okay, so we go to our global news right now for global news. I think that this is the one that really, it become a talk in the town, all right? All these so-called launches, okay, are now in serious trouble because of the, COVID cases that is spreading across, and the number of these locally transmitted cases is really, through the roof. All right, first time so high for a long time, and it's definitely troubling and disappointing, obviously. And the worst part is that this thing is going back home, okay? All right, it's going back home. So the guys, the men are going back home, and now if there's going to be anything happening at home, if people get sick, okay, that we have a bit of trouble at home already. All right, so hopefully those people who got the virus can recover ASAP, and if they affected their loved ones, then of course, hopefully the loved ones will, forgive, okay, in the way. Okay, so let me just show you what the video was supposed to be there. Okay, let's take a look. Okay.
The planned opening. I think we're not thinking so far. Right now, the priority is to quickly trace the infected cases and isolate them. But we did think about the latest restriction, the removal of the restrictions that started on Monday, where we allow 5% to dine. We thought long and hard about it, and given that we just started this on Monday, and that we now have a much higher level of vaccination rate, essentially more than 70% have taken one dose, and more than 40% are fully vaccinated, or more than 40% have taken 2 doses. We are in a much more resilient position than before. So as for now, we will keep the rules that has come into effect since Monday, and so there will not be any reversal. But I do want to urge everybody, don't just because the rules allow you and we just go out and meet 5 people all the time. Given the cases, because of the KTV clusters, potentially quite a huge cluster, exercise restraint, exercise caution, meet people only when you have to, be with your family, the same old friends if you can, and try not to circulate too much in the community. We do have a fairly big cluster, I believe, brewing from the KTV lounges.
Okay, so you heard from him, all right? He's saying that, okay, there's no need to panic at the moment, that they'll still not change the rules, so phew, okay, so we can have our dinner outside. It's just that, right, definitely it's a brewing cluster because, I said they went to these lounges and then got hit, of course, when they're on the way back home and back to the families and the kids and stuff like that. That is the part that worries people, okay? All right. This Benedict just said that the satay store assistant become a national hero. He spreaded it to the lounges, and now the infected husband can say that they went to the satay store. Okay. Okay. Okay, so all the men must go and thank him for that. Okay. Okay, so this is the thing here. You pay for the price of that. Okay, all right. Now, of course, the cases in the Latin America and US is now again surging. All right, again it's surging, and there is spikes, and because it was and therefore it's exacerbate into this violence and because unrest basically. So people are definitely going for their jabs and stuff like that. But we also see that, right, we have a lot of problem now, like North America, US, Mexico, all across the borders, El Salvador, all these places, Cuba, Virgin Islands, Guatemala, is it? I'll pronounce this, sorry. All right, but basically it's that people get very upset, and when they get upset, they go onto the street, and we go on the street, the virus spread further, wider, and of course, more people get sick, and when more people get sick, the country goes into trouble. So all these things is still ongoing right now. So the question mark is this, all right? Now back to US again. So it's like from US, then after that go to Asia, now Asia go back to US in a way. So this is not going to stop, guys. This is not going to stop. Okay, so but again, no worry, Jerome Powell is definitely there. Okay, let me explain to you why. So Jerome Powell says that even though there is this inflation, there's no need to worry. And let me bring you this now. This video is very interesting. Turn on your music, your volume a bit louder, because this video consists of two parts. Part one is what Jerome Powell has said, and after that followed by Munchkin. All right, Munchkin. Right, remember the guy who was the main strongest supporter for Donald Trump back then? He was like telling the whole world that don't need to worry about the market and he print money. Now he changed his words. Okay, his point. So watch this video and you will understand why I want you to hear what the people say when they're in power. Let's begin.
Yes, Powell is before the House Financial Services Committee today. There it is, 8:30. And he will tell them that the Fed will maintain the current funds rate target until employment and inflation reach the Fed's goals. He is not giving much here in the wake of those higher inflation numbers yesterday. So the Fed will alter policy only if inflation is persistently and materially on a higher path there. So we'll continue to monitor the implications of incoming information for the economic outlook and would be prepared to adjust the stance of policy if we saw signs the path of inflation or longer-term inflation expectations were moving materially and persistently beyond levels consistent with our goal. He says on the issue of asset purchases, potential further progress is, quote, still a ways off, and the Fed will continue discussion of asset purchases at upcoming meetings. It will provide any advance notice of changes in asset purchases. On the issue of inflation, we'll get to Rick in just a second. Just want to say that the Fed chairman says inflation has increased notably and will likely remain elevated in coming months before moderating. That's the Fed's expectations. He says inflation has been boosted by base effects, strong demand in sectors that have experienced bottlenecks, and inflation expectations, he says, so far are in a range consistent with the Fed's goals. I'll come back later with what he says about the labor market.
Well, it's working. It worked. We had a transition of power. I hope the president considers running again down the road. I think this is an extraordinary democracy. And as you said, we have an extraordinary economy. And I couldn't be more proud of the way we worked with the House and the Senate. Had we not passed those bills, I think we would have had a great depression, not a great recession. And we're seeing one of the greatest rebounds we've ever seen.
Treasury Secretary Mnuchin, we just spoke with Larry Fink. He watches the markets very closely. I know you do too. He said that he doesn't agree with the Fed, that he does not think inflation is transitory. What do you think?
Right, I just saw Larry on and I was going to actually comment. I agree with Larry. Notwithstanding my close friend Jay Powell, who I have a lot of admiration for, and I think he's done a great job as Fed chair, I respectfully disagree with him on his not being concerned. We've seen inflation numbers that are in the 4.5% to 5.5% range. I think the Fed's policy of going over 2% inflation made sense before COVID, but as I've said, the Treasury models, the Fed models can't really predict what happens after this massive amount of fiscal and monetary response. And I think it's important for the Fed to make sure they get ahead of the curve so that we don't end up with 4 or 5% interest rates, which would really slow down this recovery.
Would that mean you'd like to see them start trimming asset purchases immediately?
I would. I think that these asset purchases, particularly in the mortgage area, were important last year. I think these are very, very functioning markets. There's lots of liquidity. And I think the Fed has to normalize. It's just a question of how fast and how far.
Okay, so I was just wondering out loud, right, if this machine was actually still running with Donald Trump and they're still in the House, right? I wonder would he say this to Federal Reserve, this Jerome Powell? What do you think? Do you think that his Mnuchin, will he still say this to tell the Federal Reserve to start trimming asset purchase? I think the answer should be no, right? So that is the thing about politicians, right? They will put their interest way above everybody, and it's pretty clear. So now then their interest no longer there, then of course, right, they'll say anything that makes more sense and make more real. But of course, again, now this different person in the White House, so of course, again, whatever the Federal Reserve need to do is to make sure that they don't get into trouble themselves. Okay, so that is how I see it. So what do you think? What do you think? Agree? Okay. All right, huh? All right. Okay. All right. So the Chinese stocks now face other risks of okay, basically, right, some portfolio managers are saying that, right, they are very afraid of the Chinese stock right now, okay, especially the tech stocks. Okay, why do they say that? Now, because it's not just about the regulatory bodies that are doing that. In fact, itself, right, although the price now is very attractive, but there's concern. Regulation is obviously a top number one concern, but with what is happening in the economy is the second big concern. So in fact, it says that, right, the credit growth is slowing in China, which I showed you guys earlier in the previous MAOs. And I told you that even though the policymakers are trying to normalize the whole thing, but the impact on the economy is clearly seen. And the Shanghai Index obviously is lagging in many compared to its regional peers, example, other countries. So that's why entire year now is up by only 1.6% compared to the S&P is up by 36%. So all this tells you that the market is getting a bit concerned right now of the Chinese stock market. And of course, if the Chinese stock market don't do well, that the ripple effect will definitely be hitting the rest of the world. So you can see the stock market is up by 1.6% for the year, but compared to Taiwan, it's 21.1%, and even Kospi is up by 13.6%. So we've looked at all this tells you that, right, China, this market is definitely lagging behind. And what is the reason? Because of what happened. But if you look at it again, they will also mean, if you look, they are being hit by the COVID. Every country got hit by the COVID, and China is actually one of the first countries to recover from COVID. Then the question is, how come the economy is not recovering? That is a question that people is all asking right now. And of course, because of that, Cathie Wood sells China tech stocks, okay, because he feels that, right, there could be a valuation reset, okay. So Cathie Wood basically came on news and say that this morning, and get a quick picture of this. So Cathie Wood is getting worried, and she's basically informing that she are selling Chinese tech stock. So remember, just about last week, she was buying, and now she's selling. And she felt that, right, the whole point is this, she believed there's a valuation reset, and she felt that, right, this is not going to be good. There'll be more selling to come, and it will remain down for a period of time. So two camps straight away. First camp say, oh, Cathie Wood selling. Okay, let's follow her and sell, right? So that's one camp, her fans camp. The other camp who basically don't like what she say that, okay, Cathie Wood is out, so that means we can buy a lot, okay? So that's another camp. All right, so end of the day is two camps of people now looking at this. What do you think? Do you think that now is a good time to buy the Chinese stocks, or you think that we can wait for a while? Let me hear your answer right now. Those who say it's a buy, key the word BUY, buy. Those who say that it's time to wait further, please key the word wait, WAIT. Right, let me hear from you guys. We are 4 minutes away from the data, is it? Okay. Hong Kong is bearish. Okay, Hong Kong is bearish means what? That means the market come off? Coming off? Okay, just come off a bit from the high, a little bit. Okay, Colin say wait. Okay, okay. Okay, so Jerry also say wait. Eric say wait. Arcade also say wait. Anthony, Allison, all wait. Okay, all right. So it's not wrong to wait, but I would think that, right, when you say wait, it's a good time to look at the market. I mean, do your homework, do your assessment, prepare yourself, and not wait until that moment market turn from the bottom turn out, then you chase after again, and you get yourself hurt in the middle of it. All right. So it's good to prepare, all right, and wait out for it. Okay, good. Thank you. Okay, so let's see what happened yesterday. Okay, we saw the PPI was up by 1%. Okay, the market was looking at 0.6. You see, the previous was 0.8. They revised it to 0.6. They mean they're looking downwards. Same thing on the CPI, it was 0.7. They say that it's 0.4, but came out 0.9. Can you see that? You can see the pattern there. All these forecasts is like done on purpose to make the number, low, and hopefully people will see as a form of wow, positivity. Then after they stun the market. It's like, I feel there's a lot of manipulation here, okay? Now, of course, this morning, Jerome Powell have testified already. He will do it one more time later today at 9:30 Singapore time. I corrected for you. So 9:30 Singapore time, 9:30 p.m., Jerome Powell will be up, okay? Now, over here itself, right now, we can see that today we have the initial jobless claim. All right, so the last one was 373. They forecast 360. So my personal bet is 380. All right, this is my personal bet. I believe that the jobless claim should be higher because, as I said again, the economy is definitely not recovering. It's very clear. Now, the Philadelphia Manufacturing Index itself, right, I cannot believe that it should be somewhere near by the same number, so about 29. All right, so this is my personal take, my personal opinion, okay? All right, so that's how I see. Okay, of course, different people have different views on this. Okay, all right. Okay, let's move on. All right, the Dow Jones, you can see, is pretty flat yesterday, totally flat. It came down a little bit, then it tried to recover as usual. Then it basically ended flat for 2 hours yesterday. It was a very, very slow day, so I also didn't bother much. The moment I see the market moving this way, I know it's time to take a break already. So I went to take an early rest. Yeah, indeed, this is really when you can see and feel the market is not going to go anywhere. Colin just said that I meant overall Hong Kong is bearish with China climbing down unless you invest and buy low. Okay, understand, Colin. Okay, got your cue. All right, so what's happened overnight? So S&P 500 ekes out a small gain as the Federal Reserve stay the course with the easy money policy, as I said earlier. So basically, Jerome Powell said, no worry, let's maintain this easy money monetary policy. No need to change anything, all is good. And this is something that you must start to take note of, guys. Okay, we're entering there. Let's go and jump into the Hong Kong market right now to see anything going to happen now. Okay, we are just a few more seconds, 30 seconds away. So if the GDP numbers is good, Hong Kong should likely trade higher. Hong Kong earlier had went up. So is it a sign that maybe Hong Kong's go up again? Or maybe the GDP number is good. Let's wait for the data. It'll be out in about 10 seconds time. Am I correct, Colin? Okay, since you share about this, I didn't know about that. Let's see what will happen to the market in just a few more moments. Okay, all right. The data is not out yet. Or is it out already? All right, wait for Colin to update us. Let me check China side. 15-minute chart. Let's take a look. Any extended movement? Don't seem to have. Okay, nothing much have changed a little bit. Hong Kong also pretty flat. So is the data out? Waiting, huh? So Colin says waiting. I don't see any data here, but definitely for now, the Hong Kong shares is still pretty bullish today, at least for today. All right, that's the thing about trading is that you have to know whether you are bullish or bearish today. Overall, can be downtrend, can be uptrend, but in the uptrend market, there's also pullback. Every downtrend, there's always some recovery or so. So you must know how to balance it. All right, so it's out. Colin, thank you so much. China second quarter GDP 7.9. Estimate was 8%, previous was 18%, but of course that was during the pandemic time. So fair enough. So the thing is still within the estimate of 8%. So that's why the market have no much changes. Okay, all right. Thank you once again, Colin. Totally appreciate that. Okay, let's continue. Okay, so regarding just now, I just want to cover on this is that now all 12 companies have posted quarterly fiscal result and they all beat earnings. Okay, that's good. But there's a problem. After they have reported, right, all beat the estimate, right, 0.6% decline overall. That means that overall, right, although the companies all do well, the share price is up. But by the end of the reporting is over, the net average net change is down by 0.56%. That means that the market actually take profits, all right, on it. So of course, in the market, there's two ways to look at it. One way is that because it's a bullish market right now, people buy in anticipation, they take profit on result that is fair. But on another word is what I said yesterday about the word distribution, is that they are buying up because they know that it's going to be good, but after that, they know that the next quarter will be bad. So that's why now with a higher price, they take profit. And yesterday I talked about Goldman Sachs, right? Goldman Sachs basically tell the whole world they did very fine, but in their reporting, they just subtly just mentioned that they have harvested, all right? They were like bought in more than a good deal of money buy into the stock market, but now they took out more than that, $5.5 billion from the market. So they put in like 101.5 billion, they took out 5.5 billion. So it's like, telling you that there are more profit taking than actually buying interest. So that is what's happening right now. And of course, do note once again, right, the S&P is up by 16%. So you compare to this China A50 is up by only 1.6%. So you can see it's like 10 times better than the Chinese stock market. And also that is up by 36% year to year. From the last 12 months. Okay, so kind of like somewhere it's not very equal. The whole thing is not very fair arrangement here. So traders just kindly take note of that. Okay. All right, for news side at the moment now, I don't see any much update on news. Are pretty flat. Okay, pretty flat. So basically, stocks hitting 35,000 is a very positive note. And of course, majority of the traders are all waiting for next week, where the tech shares earnings will be out. And of course, they expect explosive movement on the tech side. So that's the reason why the market is able to hold on until right now. Okay, so for the Dow Jones, because we all know that yesterday Dow Jones was very flat, but I said to go through the motion of what happened yesterday. Let's go through. So the opening price is here. Okay, its opening price was between the two pivot. And because the KSI is green in color, right? So same thing again, if the market is to come down, right? If the market is to come down, KTR -1 will be a level to watch out for. Likely it will bounce at KTR -1 and do a CCRY. Similarly, if the market stays above OP, right, it should go to KTR +1 easily. Okay, so that is what you should see when the market opening between the two pivots and the KSI is green. So wow, look at it. The market came down, but it wasn't enough to come down to KTR -1. Then after that, you can see this guy is a BNB. Can you see here? It's a BNB over here. Now this BNB did not trigger anything, so you cannot do any trading over there. But you notice that the KSI jumped right here, right? So that means that the boys already tell you I'm buying here. And it is really the bottom of the day. And after that, slowly it went up. And of course, it goes all the way up and beautifully hit the KTR +1. Now, what is amazing is once it hit the KTR +1, it stopped there. Look at it. It really stopped there. And after that, it couldn't go higher. It come back down again. But what is amazing is again and again and again, you notice that this is the opening price of the day. This is the KTR +1. This number 35021. How on earth did the market know to stop right here? So that is the beauty of this TWB indicator. All right, really amazing. And of course, yesterday, if you had traded the Dow Jones, seriously, there's only one. There's no much queue for you to enter because nothing else can be done. No triggering around here. Don't see any BNB. So yesterday, Dow Jones was quite a tough one. If you're asking me to say a trade yesterday, I can't see any. Okay, all right. Okay, so let's look at this is what happened yesterday. It was a very, very flat day. That means a flat day means like it could be a doji day. So if a doji day means today could be a directional day, we'll look at the market shortly, okay? Let's see how it goes. All right, so let's bring in the market right now. Right, the news of China came out. Hong Kong stabilized at KTR +3 right now. So which means that the market likely may even go all the way to test pivot 1 if the momentum continue in such a fashion, okay? It is all possible. All right. Okay, let's look at the US market first. The US market. Now, the US market yesterday is actually a BNB. Okay, so I want to remind you guys, yesterday the Dow Jones is a BNB. So as you know, when the Dow Jones is a BNB, which means that you have to be a bit careful. You need to do what you do. You need to basically create the BNB. All right. So we have the BNB that was here previously. The market did not go to 1x1. So now it actually changed a new BNB. So this is going to be a new BNB right here. Okay, this is a new BNB. Now this is the new BNB high and low, new one. Okay, and here we go. So this is the BNB right now. So all these two levels will be the technical level to watch out for the Dow Jones. So if the Dow Jones stays above the high, which is at 35,060, then of course the Dow Jones can go higher. It may go to new all-time high. Okay, it is possible because that is at least what I'm seeing right now. Okay, now only if the Dow Jones go below the BNBL SL, which is 34,780, then we could see some selling. Okay, the selling won't be a lot because looking from the chart, right? Okay, I know that you may not get to see this. Right, this is the BNB high and low range. So if the market, the range is about how many points is that? Let's take a look. The points is about 280 points around there. So which means that even it comes down, it'll be down by 280 points. And if it comes down 280 points, we may just nicely bump into MA30, right? It may just bump into MA30. And of course, if you bump to MA30, then there could be a buying opportunity. So even though the Dow Jones may fall, example, may fall, the market may fall down to a nice place over here. And this may be a nice area to buy the Dow Jones again, because as I said, the Dow is definitely very bullish at the moment. So undeniable, if the Dow Jones do come down, the market may stay and get itself afloat at the MA 30 level. Okay, cool. All right, so traders take note of that. MA30 level for today is at 34,530. So we are like probably 300 points away from here, unless it's a big sell-off. If not, then down. So now the only thing for concern today is that yesterday is a doji, right? So yesterday is a doji bar. Usually the next day we do see a directional day. So at the moment now, the directional day shows that the market is trading below the OP of the day. So maybe really there might be some profit taking, all right? But of course, the market can return, U-turn up and kick up all the way and go up all the way to the new all-time high. So traders, you just have to take note of this potential, right? It could be a big down day or can be a big up day. All depends on the opening price with the current price. Okay, so traders, you need to just take note of today's doji. Now, of course, would there be a possibility of 2 doji day? It is possible. We saw in gold, right? Gold was 2 doji day, and of course, yesterday the gold shoot up by almost $15 to $20. So it is possible that anything can happen in the financial market. Okay, clear on this? All right, so that is the Dow Jones for today. Weekly chart-wise is still firming above the short-term trend line. Still very positive, so I'm not going to change this. And we look at the Hong Kong right now, it's still trading firmly at KTR plus 3. That's why when the market is KSI is green, don't fight with the market on the long side, okay? China A50, China A50, okay, see news. After the news came out, right? China A50 is now recovering, going to new high for today. All right, so it's trying to stay high and stay above the opening price. All looks good at the moment right now. Okay, so this is the Dow Jones for today. Dow Jones with the TWB system. Right, the opening price of today is between the 2 pivot and the KSI is green in color. So what does it interpret? Meaning, all right, meaning like this, okay? That if the market is to go up, all right, it should easily go to KTR plus 1. Easily, okay? Easily. Now, if it goes down below OP, then the first target point will be KTR minus 1, and after that, it may stabilize itself. So if you look at the Dow Jones right now, okay, the Dow Jones right now, if you look at it with the 15-minute chart, right, we can see that the Dow now is trading below the opening price, and there was a BNB here. Can you see that? There's a BNB here. So the CCYR with a BNB, that's why you see some selling. And I told you before, whenever you see BNB, usually there will be some movement, right? Okay, so with all this in mind, now, the thing is this, where could the Dow go? Around, if the Dow is a pullback later on profit taking, I suspect the Dow will stabilize around here. And this is KTR minus 1, and that's 34,783 level, okay? So which means that even though the Dow Jones later may fall, it will likely be falling around this region of 34,783 range, okay? So if it goes there, traders who short the market, example, you can consider a buyback because the day chart KSI is green, okay? So it's always a good, important and reminder that you must know the terrain well before you engage fire, okay? All right, cool, guys, clear on this? All right, 34,783, okay? It's all in your chart right now, huh? Okay. All right, so that is the NASDAQ, the Dow Jones and the NASDAQ. Now, the NASDAQ is the thing that I'm quite worried, but before you get, 2 doji, wait a minute, let's just see whether it's 2 doji first. Now, for us, doji, for us, okay, my way of looking at doji is, okay, sorry, okay, all right, my point of doji is, okay, that the whole entire range, the high to low versus the body, all right, the body must be lesser than 20% of the entire high to low. Okay, the whole high to low must be the body only can be 20% or lesser. All right, so that means that in order to confirm this, can someone tell me, do we have a doji here? Yesterday, the Dow Jones, right, using AIMS platform, do we have a doji yesterday? Can you help me to do on this? Can someone kind enough to do the mathematics for me? Now, yesterday, the high was 15,008. The day before, the high was 15,009. So yesterday, the high was not the historical high. It was just 1 point away from historical high. But yesterday, it was the second time the the NASDAQ went above 15,000. Okay, so it seems that 15,000 become a technical level for the market to try out. Okay, so now the NASDAQ is at 14,900. There is still a slim possibility for the NASDAQ to go towards 15,000. Thank you, Philip. Thank you so much. You have calculated for us, right? It's what, 17.5. So if it's 17.5, that means that we are having a doji. Okay, so it's the second doji of the market. So which means that we're going to see potentially very big movement in the NASDAQ in the coming days. Okay, the last time we saw something like this is here. Let me show you. The last time we see 2 doji was here. Can you see this? 2 doji, right? Then after that, what happened? The market went up by almost 400 points. So it is possible that big movement is on the way. It could be positive. Then after that, any more doji? Yes, indeed. We have these 2 doji here. And the market, instead of going upwards this time around, it went downwards. And the time it went down also about 300 points. So which means that we can roughly know that based on what we are seeing right now, the idea is something like this. I can show to you. With 2 doji, we take the closing price. I put a line there. 2 doji, put a closing price there. So as long as the market stays below the line I just draw, there will be a selling or a buy up of at least 300 points. So yesterday's closing is somewhere like this, right? Okay, somewhere here, okay? So which means that we're going to see a potential of upside or downside 300 points. So upside 300 points or downside 300 points. Okay, so you make your call, okay? You think which side the market will go, you make your own decision, then you just trade accordingly. Okay, now of course the RSI is not, okay, there's 2 ways to look at RSI. Yes, indeed, traditionally, people say this is way, way overbought. All right, but in the uptrend market, right, this actually means very bullish. So at the moment now, right, based on what I'm seeing right now, the market definitely to push forward is possible because it's bullish. But of course, in terms of the other side itself, right, the market has been up for many, many, many days. A pullback of 300 points is also not going to be any big stunner. So yes, indeed, you ask me, well, the upside potential and downside potential, of course, the downside potential is higher, but don't forget again and again, I'll repeat, right, when the market RSI is at the top and it stays top, right, means the market is very bullish right now. And when it's very bullish, means anytime the market pull back, right, the buyers will come in. So you must understand this. Very, very important. I'll give you an example. If I just take this away, I show you Hang Seng right now, example. You look at Hang Seng right now, okay? Look at Hang Seng, okay? See, the Hang Seng chart now, right, is definitely, it's all, the RSI is above the 70 marker, right? But you see Hang Seng is still propelling. The Hang Seng is still moving up. So it's not necessarily means that the RSI at the high, it will come down. TA is not like that. A lot of people misunderstand TA. TA is supposed to tell you what is happening right now. It doesn't forecast the market, but patterns do repeats. So it also must repeat based on the terrain and the market conditions, the sentiment, everything else, okay? That's why people who use technical analysis without knowing the exact thing, how to apply on it, right, usually get hit by the market. That is why people say, how come today work, why it don't work today, and stuff like that. Okay, got the idea? Yeah, Colin? Okay, so that is my personal take. So, but from here, we can be very sure that there is a possibility of 300 points up or 300 points down. So, of course, if that is the case, whether which side you take, right, do actually go for that money. It means that you can go for 300 points entirely. That will be pretty decent, right? The rate of return will be very, very good. Okay? All right, for the MA30 is here right now, the MA30. Let's take a look. MA30 is 14,591. It's very far away. Okay. And of course, this is the BNB, and I think the BNB is given, right? Let's double check. NASDAQ. Yeah, the BNB have been given, 2 days ago have been given already, just to verify that, Okay, so that is the NASDAQ. The NASDAQ day chart still the same. KSI is still very green, so no reason to panic. All is good, but towards a two double doji, we need to be very careful on the upside and downside, okay? All right. S&P 500. Now, S&P 500, let me just double check. The high here is 4393.3, 4393.4. Oh, so yesterday is a BMB. Okay. So yesterday we have a new BMB. We have a new BMB yesterday for the S&P 500. So the old one cannot use anymore. We change it over. Now this is the new BMB for the S&P. All right. So, and some more today, the MLP will be somewhere around here. Okay. So with that, basically tell us that this tells us that the market now is trading at around, let me just show you. The market now is trading around the MLP region and the new BMB, so which means that there will be a possibility of a bigger new high going much higher, or the market may pull back by how many points? Let's see. The market may pull back by about 33 points. So that means that if there's a BMB going to stay, now there's a downside potential of 33 points and an upside potential of 33 points up. So, all right, for you. So upside is another 33 points from here. Now 33 points will be winning about 43, 44, 8 points, so 21. Am I right to say that? 33, 31. Wait, 33 plus 92. So what we have is that 30, yeah. Okay. Am I getting it right? No, 34. 34. Okay. Am I getting it right? 35, is it? Sorry. Suddenly a bit of brain mistake here. So, okay. All right. Okay, so that is what we're going to see 44.25, and the downside could be as much as 43.60 minus 33, 27, 28. Okay, all right, 43.28 level. Now 43.28 is still way above the MA 30 mark. So that means that even as a pullback now, the looking at is at 43.28 level. Okay, so 44.25 is the upside potential. 43.28 is a downside potential for the S&P 500. Okay? All right. Okay, so for the daily chart, let's take a look. Daily chart, pretty clear. The market is basically between the two pivot 1 and pivot 2. And the KSI is still green in color, so the upside is still pretty strong. I mean, likely the S&P should be going up if it stays above OP. But if it stays below OP, then the downside will be 43.34. That is somewhere what we just said earlier, right? Remember that's how we talked about this. I get a drawing back. Yeah, we're looking at 43.28 level, so it's somewhere there. So let's see whether does this happen for the S&P 500. Okay, done on S&P. Let's look at the market again. China A50. China A50 is at the high of the day. Yay! So it's high right now, doing pretty good. Okay, China A50 is at a high. Hong Kong is also at the high, so all looks good. And Hong Kong yesterday is a doji. So today it gapped down, but instead of going lower, it went up. So that's why Hong Kong, I said many times before, Hong Kong, you cannot use rational thinking to play with them. You have to just follow the charts, and the chart says what you just have to follow. So yesterday is a doji, so today is a directional day, and look at Hong Kong. Wow, open already, straight away go up already. So this is like very, very crazy, right? So that's why a lot of traders will get caught by this if they don't know how to play the market, right? You cannot use normal thinking to play. You have to do something different. You have to believe in what you see as a pattern, then you follow it. That's the key point. You have to follow the chart. Okay? All right, so that is Hong Kong now, very bullish at the moment for today at least. Okay, DAX. Now, DAX yesterday, well, we can see that DAX created a new all-time high. Let me just delete this one. It's OB high level. Let me just take it out. It's an all-time high. Hey, this is the, oh, I didn't, wait a minute. Sorry, I didn't update this indicator, the one I passed to you all. Never mind, it's okay. At least we know the all-time high is still here. Okay. All right. So what happened is that DAX has yesterday hit the all-time high, right? Yesterday and pulled back. But when it pulled back, right? Okay, you notice that this is the MLP yesterday. And it came back down, broke below MLP, but eventually still stay overall bullish. So let's look at the chart pattern right now. The market definitely, hold on, let me just, it's our lines, let me just clear out all the lines first, just so don't confuse you. Okay, so let's look at the nearest BNB. Oh, by itself is a BNB, right? Yeah, by itself is a new BNB. So that means that we have a BNB as all-time high yesterday. Oh, okay, wow. Wait, the high is here, 807. Yeah. So yesterday was an all-time high for DAX. Yesterday also at the same time is also a BNB. So I have said before, whenever you're at an all-time high level and your chart is a BNB, right? You have to be very careful because the market this could be the highest already, or this could further propel it higher, but usually as a BNB all-time high, there is a small possibility, a higher possibility that the market, this is the high for now, temporarily the high for now. It is possible. So traders do kindly take note that this is something that you must be careful because this could be the turning point for the DAX. It could be, I didn't say it will be, but it could be. So this BNB, you have to watch. Okay. So with that, then obviously we will have the MA30 today. Okay, bring it in. My MA30 is here, and that's 15,649 level. Okay, that is what you're seeing right now. Okay, so you can see that there's BNB. Watch out for the BNB SL, but the MA30 15,650. That will be the very important level that I think traders need to watch out for. 15,640, right? 650, sorry. This is the level to watch out for, okay? Traders, 15,650 for the DAX. Okay, all right. You can see that the Hong Kong market is still going higher, right? So you can see, don't play with this, okay? When the market wants to go in one single direction, it can really kill you, all right? If you short the market, you're in serious trouble. Okay, all right. Look at Japan right now. Now Japan is down because the yen rose. I mean the dollar yen went down, so the yen went up. Can you understand, right? And when the yen goes up, it's not good for the economy. They don't like it, and that's the reason why you can see the Nikkei hit the MLP this morning and reversed down already. And of course, the scary part, as I told you guys, is that we have a death cross already yesterday. So now if a death cross, so some of the system will the algo will kick in to sell. Yeah, that's what you're probably seeing right now. There's some algorithm trading that is shorting the Nikkei right now. It is possible, all right? So traders who are in Nikkei, just kindly take note of that. So you look at the TWB system on the Nikkei. All right, Nikkei is bad itself because now it's trading below pivot 2, right? Below pivot 2, below OP, same thing, right? So don't care where you are in the world. Below OP, below pivot 2, short the Nikkei. Can you see that? So that means that even though you never traded a Japanese stock before, but because you know what to do with the TWB system, you just have to follow rules and trade. And you can see now this morning, the Nikkei, once you have opened, it stays below the OP, and very clearly there is a BNB right here. A BNB, the top line and the bottom line. So when the market broke below the bottom line, you look at the Nikkei, keep on going down. And of course now it's below P2, the selling is even stronger. And of course the KSI, intra KSI, all the way has been sellers. So Nikkei seems to have a lot of selling pressure ongoing right now on it. So you can see that our system can go really universe. Okay, anything we just follow the rules of engagement, we can able to make money out of it. Cool, huh? Okay, all right, so that is the Nikkei, all right. Oh, in a minute, let me just do some stuff here. Okay, so that is the Nikkei, and now we look at the commodities market, which is gold, silver, and crude oil. Okay, gold firms as investors, 6 staple Q from Jerome Powell testimony, and gold firms after US CPI surge, strong dollar, but that is the day before market saying this. So this news is 1 day, 2 days ago already in a way. So the strong dollar, no, yesterday the dollar came off. Okay, so let's look at the market. Now, beautiful, 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 all right? First of all, why is it beautiful? The opening price is actually between the two pivot. That's why we know that as long as the market stays above OP, we can look for it. Now, don't you notice that the last few days, there was no blue bar at the bottom, no blue bars. So no blue bars already tell you that the market is bullish. Okay, that's the first thing. Number 2, the KSI is all the way green, all right? So this tells you there's 2 real big reasons the market is bullish. So you see, traditional indicators like this, just looking at the chart like this, will tell you nothing. They won't be able to tell you it's bullish or bearish, but for us, TWB student, straight away we know that it is actually bullish. So when the market opens and purposely tap the pivot 2, tap the pivot 2 and rebound, right? We know that any CCRY will be a buy. And of course, if the market goes up, it will likely be going towards the pivot 1, and that is 1823. So imagine that if you buy 1804 and you buy all the way to 1823, that's about nearly a $20 gain, and that's a lot of money. One contract, it will yield $2,000. So that is how beautiful the system is. It tells you what to do, and you just have to follow. And did the market really display that? Well, look for yourself. Okay, look at yourself, right? Initially came down first, then it hit the pivot 2, the KCX kicked in, then that is where it stabilized, and that is where it goes above OP. When it goes above OP, it triggers OP, and you can buy because there's a trigger point by OP and pivot 2. But you say that no, I think it's too early, I don't want to buy, fair, no problem. The market goes sideways for a while. It didn't trigger, so not counted. Wait until here. Now, when it hit here itself, the CCRY, and it triggered the KTR plus 1. So by right, you can buy over here. The stop loss, just place it here or here, depending which one you are more comfortable with, the risk management. Then after that, the gold went sideways a little bit, but no cigar, because why? There's nothing triggering, right? So you don't need to worry. But the thing is that when it come back up again here, where my student asked me, can we buy over here? Well, it's the same thing. CCRY triggered KTR plus 1 because the entry bar is trigger KTR plus 1. So it's a buy, right? So this is where you can buy again. So this is where you can buy A, you can buy at B, you can buy at C. Sorry, B cannot. You can buy at B and buy at C. Okay, so that's how you should have traded. Then after that, you notice that there is this BNB right here. Can you see that, the BNB? Now this BNB is not part of the color change, but it's part of the yellow bars. And if you remember this, I told you draw 2 lines, the top line and the bottom line, to give you a indication of where the market will be going. And of course, suddenly this is what happened. Bang, it went all the way up itself from here. Don't you see that? So when it goes all the way up, right, the crazy part is this. Look at the chart. KTR plus 3, and look at the way it stopped there. All these are all mathematically calculated numbers. 1829.51 was a number that's already available on your chart as early as 6 a.m. in the morning. And the market really go all the way there and stop there. And that's the reason why we keep on telling you guys, when you see the market trading like this, you must really trust the system. The system is that fantastic. I mean, which system in the world can do this? And of course, what happened after it triggered? It couldn't go higher. Boop, it came back down again. So this is why I am very, very sure that if you guys is to follow the system, you guys will be, a lot of you guys are making good deal of money in the market. So those who made money in gold, congratulations to you once again. You guys are good. Okay. Those who didn't make money in gold, please ask yourself why you didn't do it. And maybe this time around today, you can do a better job. Okay. So that is gold. Let's look at gold chart for today. All right. By the way, Hong Kong is still trading higher. Okay. So you guys don't mess with it. Okay. Hong Kong, when they want to go, it will not give you any chance. Okay. Okay. So that's Hong Kong for you. Let's look at the gold market right now. Okay. So this is gold. Now, gold is now off the highs today. Well, after a big move up yesterday, it crossed the MA30. It crossed the MA200. So jolly well, this is a very bullish indication. I repeat, this is a very bullish indication. But because it's bullish indication, the question mark is that, do you think that you'll go higher, right? Well, my opinion is it should go higher. Okay, because nothing is going to stop it around. So 1834 is a Fibonacci number that I've set it, and I think that it will be going there. So I strongly believe that 1834 will be traded later today, latest tomorrow, unless something fundamentally changed, okay? If not, go to hit 1834 is there, but you cannot just jump in right now. You must follow rules. Only when the rules allow you to buy, then you go for it. But 1834, I think will be a good number for you to take some profit first. Because of course, after 1834, the next number can go even higher, but let's just stick with 1834 first. Okay, 1834, okay. All right, then weekly chart wise, beautiful. It crossed the 1820, the MLP of the black bar down. That's why that gave me the strong indication that the gold price may actually go higher. Now let's look at the gold chart, day chart, right? The gold day chart now, let's take a look. The gold day chart opening price is between the two pivot again, and the KSI is definitely green and no blue bars at the bottom. So all system go. But then you say, how come the price come down? Hold on, guys. Trading is not saying, wow, every day must go above OP1. Wait for a while. If the market will give you a signal to buy, it will go back above OP. Then after that, you can go for signal. Now, because the KSI is green and you want to buy it cheap, then what can you do is go to a 15-minute chart and hope and pray that this happens now. You hope and pray that later on gold come down and hit the KTR plus 1, which is 1820, and then after that, stabilize and go up again. Okay, that is the best ideal picture of this. I mean, if it really happen like this, then everybody is happy. But of course, at the moment now, you can see for the time now, the gold has been still staying around the OP price. Okay, it's still staying around the OP price, so we just had to wait for a while already. Okay, so I've given you my view. So upside potential is still going to be 1834, and interestingly, 1839 is near to the pivot one is 1839, and the target is 1834 that we are aiming for. Okay, all right, that's gold. And for silver, I told you guys, silver will be going up. There's a death cross, and yesterday we saw the silver being resisted by the MA200 and MA30. Very familiar, right? Exactly what happened to gold recently, right? Look at gold. Recently also do that, it triggered both sides. And I told you after it triggered both sides, big movement is on the way. And really, it really happened. So that's why TA, right? If you understand how to apply it, you will know that you have to forecast certain things and things just manifest by itself. Okay? All right, for silver chart, let's take a look. Silver. I just need to update everybody on silver first. Silver, the chart should be ready latest by Friday, right? Latest by Friday, which is tomorrow. Because we are ready on our side, our indicators are ready, but the server, with the linking to the main server, we have a bit of slowdown because our programmer is having a bit of problem with the new server because we just bought a new server to prepare for ourselves for the app. So that's why silver may take one more day. All right, May. We try to do it by today, but if it's going to be delayed, then that's one more day, okay? So one more day before you can get the silver indicator, okay? So those who want the silver indicator, just kindly give us one more day, all right? All right, apology about some technical thing. We cannot forecast this. Okay, for silver, so the way of trading silver is the same, KCX, KSI, CCRY as per normal. So silver has the potential to go back up again to $26.53 because the KSI is green and there's no blue bars at the bottom. So everything still looks pretty good, okay, for silver. All right, last one will be on crude oil. Now, crude oil, this is the crude oil chart. Now, yesterday, crude oil chart went down below the MA30 again. Now, this is not a very good sign because you must understand that when the market goes below a moving average like this, after become a strong support over the last few weeks, so this actually tells me that there is a small possibility to see the crude oil price going down a bit more. So I suspect that it will break the low here, and it should be. So if you ask me, right, my personal opinion, I think that this okay, what he's here, yeah. This I believe that this will be the first target because there's a lot of people bought crude oil recently. So this will be the low end, and this will be likely the trigger point, which means that the boys will purposely want to bring the price down to trigger all the stop loss there. My personal view, that's usually what I see. If there's another one that they may want to trigger, maybe it'll be this neckline here. That's about 69.50. So I said this before already, right? If crude oil do come down, I'm very comfortable to buy at $69 to $70 range. Okay, so let's see whether crude oil will come down to this point. And of course, if crude oil price is come down in this manner, then there is a small possibility to see crude oil price, bringing down the crude oil price may bring down the energy counters, and energy counters may go down, and that may bring down the Dow Jones a bit. So we did see just now during the MAO, we talked about S&P down by 33 points from where. So that if everything is worked in accordance, right, there is a small possibility to see a 33-point pullback on the S&P. And if that would happen, because the crude oil likely will be coming down to about 69 to 70 level. Okay, so that is my personal take on the crude oil. Okay, all right, guys. Hope you guys like the sharing. If you like the sharing, please key the word like, LIKE. If you don't like just to do anything, I want to see whether you're still around. I see 56 of you guys are still there. All right, the last time we interact was some time ago, so you're going to see whether have y'all took my lullaby and fall asleep. All right, so this is the thing here. Every morning I will do a lot of sharing. I'll do a lot of stuff for you guys. And the only one reason I'm doing all this because I want you guys to benefit from it. Okay, really. Only when you benefit, right, then this whole thing is worth it. Yeah, that is the reason why I took all this effort to do the daily MAO. You must understand to do 33 to 38 slides every day. Yeah? All right, although there's some of them are quite template stuff, but still it takes a lot of effort. Yeah, so that's why I want to see that you guys profit from it. Yeah, indeed. Oh, thank you so much. Wow, so many likes now. Thank you. Appreciate that. Thank you, Nasin and Osing and Bernard, Ong, Janet, Alex, Allison, Jerry. Okay, so while I'm doing all the likes here, it's all right. We'll take a short break for 15 seconds. We'll come back. We go to the second part of the MAO. Okay? All right. Thank you so much once again. Thank you, Eric. Wow, thank you. Wow, this Min Hui, Fred, thank you. And of course, our Liu Tiu. All right, thank you so much. Wow, super effort by Kelvin Han. Wow, love. Okay, all right. Thank you very much, guys, for that little thing here. I mean, end of the day is this: if people do things for you, you can take it as two ways. Oh, I paid for it. FYI, MAO was never a paid product. MAO is a thing that I used to do it because I want you guys to benefit. And last time MAO was only like 10 to 15 minutes, just technical and that's all, right? But of course, later on, I realized that more and more people ask me fundamental stuff, and I take a lot of effort to actually go one by one. And if out of nowhere, I key a bunch of the information into the group chat, looks so funny. So that's the reason why I think through. Might as well one time I do you the MAO, market analysis and outlook into a session like this. And people who like it will watch it. People who don't like it, they can just skip it. All right. Now, the only thing is that some people who watch it, they get angry with it. So that's a point that I kind of like, Okay. All right, now we do the alternate market views. Okay, let me explain to you why I say the cost of buying as a bear. I mean, of the cost of a bear. I'll come to this in the last slide. Okay, just give me a moment. Let me just change the temperature or the aircon. Cold now. Yes, thank you, Alison. It's a lot of effort, trust me. If you ask yourself this every day at the ball through at least 10 YouTubers and also many websites tend to buy and get out the essence of it, right? It's not easy. Now, I'm not trying to claim credits, but I think that if you are not happy with the thing, just don't watch it. Don't get upset with it. Every other day I get some feedback. People watch the MAO and get angry. I'm like, huh? Okay, now this one today, the charts is something, it came from a YouTuber, okay? And this some of the charts itself, you probably never seen before, even for myself. But I kind of like it to just share this with you, okay? So this shows that the short-term breadth have dipped to oversold level last week, okay? The burst is taken from YouTube, right? So it's not very clear, okay? It's not very clear. But what I'm trying to say over here is that the market near the short-term oversold region, okay? Oversold region. So this is that 20%, right? So the last time we see something like this was here. So we move up, right? You see the market came down, right? Okay, got the idea now? So it was like something like RSI, but a bit different. Like the last time was something terrible was here, right? It's down a lot, right? But the market also sold down. Can you see that? Okay, so you got the idea now? Yeah. So the last time we see something like this, again, those significant one, the market came down. So the question mark is, now we are all at the low, at the so-called oversold technical level. How come the market haven't come down yet? So that is a point. That is a point that the market shows that the thing. Okay, Liu says that there's a technical point changeover for DAX. Oh, okay. So we are at the same point, BNB. Okay, thanks, Liu. All right. So the question is that how come we haven't come down yet? That is the biggest question, right? So this guy is saying that, okay, usually it tends to coincide with a durable bottom. Okay, you can see that, right? All the durable bottoms. So unless it haven't started yet, then this could morph into a much bigger bear, which happened back in 2018, okay, back then. So this is two sides of it. One way is that you're looking at it from, the point is, because the market is so bullish, the market cannot come down. So even though it's oversold already, right, that means that the next movement we will see is that the market will U-turn and the Dow will go even higher. So that is one way to look at it, the positive way. The negative way will be like, okay, that means that somehow it's like behind the curve, which means that there will be a sudden drop so fast, so quick that it will spook everybody. So that is the second one. So what do you think? Right, so this one is something that you guys can consider, okay? I wouldn't go into that because I don't know what is he using. But what he uses is that the percentage of members are those who are all the counters that is below the 20-day moving average. Okay, so this is the one that you may want to take a look right now. This is the percentage of members that is now above the 200-day moving average and also above the 50-day moving average. So it's like now looking at overbought region. Okay, so pulling back, there's a lot of ongoing under the hood of this market. The spread between the percentage of members trading above their 200-day and 50-day moving average at its widest point since 2011. Wow, okay? This means that while most stocks remain above the 200-day MA, okay, that's basically most of them, a large number of them are now trading or trading below the 50-day MA. So when this thing happen, right, it is well known to be telling you that market breadth itself is actually not that good. So usually this will create and precede into an intermediate peak, which I totally kind of agree, and I think I showed this before. So let's just again look at the chart. Okay, we do it very slowly today. Now, the last time this happened, that was here, okay, this market pulled back, right? The last time this happened, the market pulled back a little bit. The last time this happened, the market pulled back, but later, much later. The last time this happened, the market pulled back. So now the question is this, we are now way above the usual high as compared, right? Can you see that? Way high, but the market haven't pulled back. So the question is it because that the market is too bullish or everybody is biased, there's no sellers, or is because that, you know, the market is going to go new high? So from here itself, right, I will kind of explain this to you what I saw yesterday in Goldman Sachs so-called report. Goldman Sachs, the way they write is they are taking off their position because it's like rearranging portfolio while the market is healthy. That way. So it's telling you that now because people are buying and buying and buying, right? So Goldman Sachs is taking this opportunity to reposition. So if let's say they are very bullish in the market, right? Why would they want to actually reposition themselves? Number one. Number two, why would they want to sell? If you sell something, you buy something, then the thing will balance, right? But when you sell something and you don't buy something, right? That's not repositioning. That is basically going cash. So why would you want to go cash at this time now when the market is so bullish? Unless you know something that we all don't know. So that is the reason why when I see all this, I tell myself I just need to be very cautious of the wind, and I just have to wait for the right point to enter into the market. And of course, this is their own trend fragility indicator. Now this indicator is like now at 98th percentile level, showing you that really usually when this happens at the 98th percentile level, the market usually will pull back. So let's try and explain this to you. But not every time will pull back. So you can see that all indicators will work, but there will be point whereby it will fail in between. Because if the market is just generally bullish and everybody is buying and there's so much funds in the market, right? No matter what indicator you have, it's going to have its own limitation, even for myself, even for our TWB system. That's why, after all, I realized that this is a problem here. That's why I changed it over. We don't have any indicator that tell you buy or sell. It's just telling you what the boys are doing. And as long as the boys are buying, you stick to the buying side. You understand? That is why the difference between us and other schools. And of course, this is from TD Emirates, okay? This is called the IMX indicator that measure actual flows and positioning of millions of retail accounts. So this is something cool, right? From TD Ameritrade. Now, of course, TD Ameritrade is not the biggest, but it's one of the bigger ones. And apparently now, right, it's telling you, okay, telling us, in fact, that the current level now, the number of retail sales that involved in the market alongside the highest level it went was around this point, which is about 8.8. And after that, the market came down. And that the last time when this happened was back in January 2018 before the taper tantrum. So now where are we now? Wow, we are even higher. We are even higher than the 2018 level. So are you telling me that later on something drastic will happen? Well, I already told you guys, the only thing that I foresee in the near future is that the way to bring the market down, must be a black swan, really, a black swan. I already say this in my sharing during this preview. I will say this again. The only thing that can bring the market down is a black swan, because only a black swan whereby the Federal Reserve cannot handle it or wouldn't know about it, right? That will create the downer. If not, right, sorry, the market will just keep on going higher and higher because there's no reason to sell. Hence, there's no reason to be worried about. Okay, by the way, Hang Seng is now, Hang Seng is now at 28,100 already, up 500 points on the low. Oh my God. Whew. That's why I tell you guys, don't fight. Don't fight on Doji Directional Day. Okay, don't fight. All right, so this is the one that you're waiting for. Let me just explain this to you. Give me a moment. Sorry. Okay. So analysis, this is from Reuters. Wall Street charges ahead, but some option traders hedge against short pullback. Now this is actually updated on 13 July, means 2 days ago. Let me explain this to you why. Now take a look. A put option hedging against a 10% drop in the S&P 500 by August this year is about 35 times more expensive than a call option. Wow. That means that, right, example, you have two bets. Either you bet it will be down or bet it up, right? The cost of having the cost is 35 times more expensive. That means that people, you want it, right? You pay 35 times more because the market is asking to buy the call because it's cheaper and the put is more expensive. So the question is that why is it more expensive? Because now the thing is that, right, it is compared now back then in March 2020, right? That was at a low end, right? The cost of having a put option was 11 times. Now the market is at a high. It's the other way around. The market now is at a high and the cost is at 35 times more. So which means that it costs even more money to buy the put options. Okay, it costs more money to buy. So two ways to look at it. One way is forcing you to buy the call options. The other way is that because it's so expensive, that means that seemingly that people want to buy, you want to pay for it, you pay me more money to get to give me more premium. So that is why, but underwriters are getting a bit worried on this on the same time, because market is so high now, right? If the market goes the other way around, it really goes soft, the guy who will write the options had to pay a lot of money. So that's why the cost itself increased by 35 times, or at least 35 times compared to call options. Okay, so that is the thing that one you take note. So do understand this doesn't mean that the market is hedging with option, means the market is bearish, not necessary. They know that the market could be way overvalued right now. So they do the options is just basically to protect their base position. So which means that they don't sell their portfolio. They leave the portfolio to get the dividend and their earnings and assets, but just to play safe, they put a call, they do buy the put options. So if the market pull back, right, they can use this profit to buy more stocks at the bottom. Not necessarily their dumping position. Okay, so you must understand this. Now, statistically, that's something that you must take note of. The S&P 500 has a decline of 5% on an average of 178 days. Now, World War II is 1945. So 1945 to today itself, right, is about 75 years. 75 years of data tell us that, right, every 178 days. You understand? So 75 years, all right, there's many days, right? Every 178 days calendar day, there is a 5% drop, all right? So the thing is this, the latest advance until today is 292 days without a fall of 5%. Now, this is the longest period since January 2018, where 715% of advance was followed by a 10.8% drop. So on a flip note, do note, it can go crazier. It can be even like 715 days, okay? So not necessary that now 292 days is too big, right? The last time is 715 days. So guys, all these plays a part, just to inform you that that's the reason why traders are kind of worried. And of course, the seasonal pattern also is another thing. We all know that through the stock trader almanac, right? We know that mid-July through October has always traditionally been the weakest time of the year because of the summer holidays and stuff like that. So basically, you also must take note that this is traditionally one of the weaker time to trade in the market. So overall itself, we know that the market has been resilient. We know that the Federal Reserve is pumping lots of money in the market. There's no reason to sell. Hence, therefore, at the moment now, to sell in the cost for a bear market to survive, the bear to survive in a bull market, right, it's going to be very difficult. But of course, the odds are all on your side at the moment. So as long as you control your risk-reward ratio management, right, you should be able to make something out of this. You understand my point? Because yes, indeed, the balloon can go that big. But before you go to this big, before you prick and burst, there's a procedure to go to that level. And that is the point why the market is telling you, hey, you have to be very careful because I can be solvent longer than you are. Okay? So that will be the all for today. I hope you enjoyed this MAO session. I wish you all the way best. Today, there will be afternoon MAO. Yeah, today, 2 p.m., I will do my afternoon MAO. I'll talk about crypto market. And of course, crypto market do have a little bit of this inference towards the technical market of the financial market side. Okay? All right, that will be all for today. Have a great day. I see you guys at 2 p.m. later. All right, bye-bye.